can businesses do to increase their value? So I've identified 8 levers here. So the first one is recurring revenue. So again, businesses that can demonstrate that they have recurring revenue of any sort tend to sell at higher multiples. So it could be like a software subscription, that's the obvious one, or it could be a maintenance, like a landscaper that that's recurring revenue too, or it could be a warranty on a product. Just think about for your clients like what this could be for their business. And it's really about telling the narrative and being able to show some data to support that customers are likely to come back. It's really just a measure of the stickiness of a customer relationship more than anything. In my business over the last couple of years, I've tried to do this too, with a little bit of success. So as business owners are wanting to go to market over the next 2 to 3 years, we do this assessment, but I also have kind of a quarterly maintenance model too, where we'll look at the valuation, we'll look at we'll benchmark them compared to their competitors, and when we do this assessment, we come up with some recommendations, and we'll meet with them quarterly. So it's like a quarterly kind of maintenance fee to help them prep the business. So it's a small amount, but it's a way to just get your customers more tied to you. So it takes many forms. There's a book by John Warlow, who's one of the guys I really follow in the space. He has a podcast called Built to Sell. He wrote a book called Built to Sell. It's one of the best books. And then he also has a book about recurring revenue. And there's like 7 or 8 different kinds of recurring revenue that he's identified. So that's a good read. Stability. So it's really, really hard to sell a business where the earnings and the revenue are in a state of decline. I'm very happy if the business is stable. They don't even have to be growing. As long as the business is stable, that works. Like they can show that they're very consistent. Growth, even better. We can tell a better story. Stability is key. So I would much rather see a business that is doing $1 million earnings every year than 3 million, break even, 2 million, lost 100K. Stability is very, very important. Third one is the macro environment. When we go to market, we're going to have to really show what the next 5 to 10 years could look like for the buyer. And I want to hear from my seller, if you were 10 years younger or you're going to stay in this business, what's the growth story? What does this look like for you? How are you going to tell the story? Let's even identify 4 or 5 growth initiatives that you would do. Let's give this to the buyer as like a sweetener of like what they could do. And it's very important to have that in there. And then also show why you think your macro environment is going to be stable. What is AI going to do to your business? AI is going to decimate some businesses. If you're anywhere in the crosshairs, you got to be able to tell the story of like why you think you're going to be. Why you think? I was talking to a business, like a court reporting business, like, do we still need these people in 5 years? Like, do we need court reporters anymore? Do we need sketch artists in courtrooms? Like, some of these businesses are just, I think it's going to be tough for them to tell that story. So those are typical. Diversified customer base. This is a big one. We talked about customer concentration. Anytime you have more than 25-30% of sales, it just becomes a huge part of the discussion every time you're talking to the buyer. You can't get them off this subject. So what you really need to do, if you have this customer concentration, then what you have to do is really prove to them that your relationship, and this, you see this a lot in certain industries like aerospace, where there's Boeing and there's Airbus, and there's only a few prime suppliers with Boeing. There's not that many customers out there, so you're probably gonna have customer concentration. So what you have to do is show that your relationships at these companies are multi-threaded. You're working in different divisions. You have different points of contact. You have the sourcing people. You have people that are going to vouch for you. So you have to just really tell them a much deeper story of the depth of your relationship with that client. But it's best if you have a business where you just don't have customer concentration, because that's just it's going to make buyers feel a lot more comfortable, and you're more likely to get a much higher percentage of cash at closing. I am talking to a company right now, and I'm kind of undecided if I want to take it. It's a 3PL. So it's like a warehousing type business for e-commerce companies. He's in Orange County. He does 25 million in sales and like 2.5 million EBITDA. That's a good number, right in my sweet spot. But he's got
one customer.
60% of sales to one customer, and he knows that this customer is outgrowing him, and he feels like he's not on. He's got like another 6 months left on his contract.
Well, AET was exactly the same problem.
Yeah. So you see this all the time. And this guy, I like this guy. He's realistic. I said, look, this is not going to be a high multiple. Probably looking at like a 4 times multiple, but I think you're going to get maybe 50% cash at closing. So I'm probably going to, if this business is worth 10 million, you're probably looking at 4 or 5 million cash. I said, I'm okay with that. So, I mean, I don't know, we'll see. Bench strength. What does the team look like? There's going to be a lot of discussion about what happens when you leave. How do we keep running this business? Who is around? How do we keep them motivated? What's the quality of this team? Who are we going to need to upgrade? Because all those questions directly translate to adjustments that the buyer's making on their spreadsheet for, like, okay, if the CFO is like going away and the owner's doing 3 jobs, we have to go. And this happened on this e-commerce deal that we sold. There's a boyfriend and a girlfriend. The girlfriend was the amazing designer. She would launch 20 to 30 new products a week. She was an incredible designer. And they let her go after the deal. She worked for a year. They let her go. And then they had to replace her with a CEO and 4 other designers. And they couldn't do the work that she was doing. So yeah, what is the team? We spent a lot of time. Here's the org chart. Here's the roles. Here's the hires that are needed. Here's the profile of the people that we need. So we get into that level of depth. Clean books. This is number one thing that has to happen. So a lot of these.
Sorry, I was just going to say. I remember your first slide. Sorry.
No, it's just typically in this segment, business owners just don't spend on the finance function. They just don't. They have a bookkeeper that gets the transactions into QuickBooks. Nobody really understands what the financials are telling them. Most business owners operate by looking at their checking account, and if I have cash in there, it's all good. No, but very few business owners are looking at margins. They're looking at trends. They're reconciling. They're making sure the tax returns are actually saying what their internal P&Ls are saying. There's so little financial literacy. It's crazy to me to see this with business owners that really don't understand their financial statements at all. So it's really important for them to bring in. It's really important for us all to bring in a fractional CFO that can really put the books on an accrual basis. A lot of business owners even operate on cash, where you're not really considering your receivables or your inventory or your payables. I mean, that's a huge part of the business, right? So a lot of businesses operate on a cash basis, and that's generally a mistake when you go to market. You got to go to accrual basis, but you got to, more importantly, what are the financials telling us? What are our margins? How do our margins compare to competitors in the industry? What is our overhead cost? Are overhead costs too high? What are we paying for insurance? Like, those are questions that have to be answered before you go to market, because you got to know where you stand, or else you're going to shred it. Buyers are looking at literally hundreds of deals per year, and if they don't like what they see, you're done. You have one shot at doing this right. So it is a very hard decision, very hard discussion with business owners to get them to spend the money to bring in. I have a CPA. What's the problem? They don't know that the CPA is not great. Like, business owners just don't know what they don't know. So it's very hard to make this case. But the one thing I fight hard for every day is, like, let's bring in a financial professional that can clean up your books so we can make sure the numbers are right. I had a deal. Luckily, it was the training for the wealth managers, and they paid $2 million commissions out of retained earnings, out of their equity account. The commission should have been run through the P&L, through the commissions line. They didn't do that. So they were essentially overstating their earnings by $2 million. So if we were going to go to market and show a business that was making $3.5 million when it was really making 1.5, I mean, everyone's going to be upset. We're going to have a busted deal. The buyers, I'm going to lose credibility. The seller's going to lose credibility. The seller's going to be mad because now they're getting offers for $4 million instead of $12 million, like they thought they were going to get. So these mistakes have to be caught before going to market. So I fight hard for that one. Niche positioning. So what are the 3 things that you could say that you do better than your competitors? It's really important to be able to tell that story in a pretty credible way. And the last one is a playbook. Do you have your processes documented? We want to make it as turnkey as possible for the buyer to come in And how do you onboard customers? What does that process look like? What does your collections process look like? What does your bidding process look like? And these are things that we really have to have documented before we go to market, because we just want to present like a compelling package to buyers.
It's got to be turnkey.
It's got to be as turnkey as possible.